If I open up the edge, tools, bond edge, if you're not familiar with these, don't worry, you will be, but we're going to scroll down. Knob. We don't need to see the knob right now because I'm just going to show you how the ZN fly is the exact same thing. ZN fly down here. Let's show the plot. And I want to take off the fight. So what do you think? What do you see? What do you see? And I'll highlight a few things. Same chart, guys. Identical. There's no difference. It's just a triangle. How cool is it, though? I mean, do you see how it just kind of makes sense a little bit? Tony, and that's a real smart comment, too. It's retraining your brain. And Tony says, looks like I'm getting used to looking at spreads visually. This will be good when brain gets adjusted. But that's why I want to remind you that, and in response to Keith, your comment, that sometimes it gets tempting if you're in a spread and one side's up and one side's down. No, it's not. I don't think like that. I don't care. I only know flies, like even higher level than I'm asking you guys to think. I'm asking you guys to think about spreads. After that, you'll think about flies, and it all builds up to all of our teachings, which talk about managing things at the portfolio level between futures, between options. How about this? On the right, on this chart, how many products are we looking at? How many individual products are we looking at on this chart? Right, I mean, good point. 3, 5 10s, 10s 30s. And the same thing here, we're looking at 3. This is just a way to simplify things, guys. And there's a monthly futures membership. And the monthly futures membership, you get classes every Friday and access to the Discord channel. So what I wanted to do with this presentation is teach you guys the bond trade, get you exposed to bond edge, and then hopefully we end up working together for 5 years. And you join the futures program, and we have continuing education every single Friday. So that's the ultimate goal, that I'd love you guys to join us. It's a really freaking good trade, and I think you'll be really excited the more that you learn. So hopefully that makes sense. I'm gonna hit the beaker. Here's our bond edge. And let's use the implied ranges, the implied volatility bands. Here's the ZN outright, and we use the volatility bands to make trades because volatility bands are going to present support and they're going to present resistance. If you're going to do an outright trade, when the ZN touches the band, it should rebound. It's the implied volatility band, Joseph. It's the expected move in options. There's going to be a lot of gamma when it gets close to these implied volatility lines. You need to follow the butterfly to see if it's expensive relative to the curve, relative to its neighbors, and then do this trade. You can get yourself into some trouble. In a really good market, you can do fine trading both sides of these blindly. But in this environment, volatility is higher. And just thinking long-term sustainable trading, you want these trades, and then you can also do these trades on top of them. But you don't want to sell, right? If you sell the 10-year futures contract because it's here, the reason you're selling it is because it's expensive and it's bumping up against its applied volatility bands. But it's not expensive if during that same period it's all the way down here. So it's just something to watch out for.